Arvind Sanger is now joining us. He's managing partner at Geosphere Capital Management. Arvind, good morning. It's always a pleasure having you with us here. End of the year, and markets have done so well here in India, and of course out there in the US as well. Although it's been big tech in the US, the rally there has been broadening out, though. What's the prognosis, Arvind? We've had, and I was mentioning this earlier, Fed Chair Powell hinting at rate cuts, and since then, almost it seems orchestrated. Everybody else coming on and saying, well, maybe he not misspoke, but maybe the market read too much into it, and rate cuts are coming, but not immediate, etc., etc. Just pushing back a little bit. What do you make of it?
Well, I think clearly the financial conditions have gotten so loose so quickly that the Fed is a little nervous that maybe it'll reignite inflation or reignite growth. And what they want is they want the economy to slow down sufficiently that inflation, which is on a downward path, stays on that downward path, and they don't want things to get too frothy. So I think they're trying to do that, but I think the market has made this bet right now, and this is a bet for the last few weeks, that inflation is in good shape, and interest rates are going to start getting cut March or maybe earliest or latest by the second quarter of next year. So I think all of that has been behind the rally, but you're seeing a little bit of a momentum come out of the rally. I mean, we've come a long way quite fast, and we saw that in India a couple of days ago in a meaningful way. We've seen that in the US also a little bit at a similar time. But I think, at this point, we're going to need to see for a broad-based risk on trade to carry the markets much higher. We're going to need to see data that suggests continued inflation, coming down. And there are some flies in the ointment. I mean, this whole Red Sea thing could be a little bit of a fly in the ointment if the weather turns colder, which has been a very warm winter in many parts of the world, and that causes energy demand to come back. If the Red Sea dislocations do cause, container shipping and therefore demand there, and therefore pricing there, and for oil, if the ships have to go a longer distance, if all of that reignites inflation, I think in a minor way, not in a major way, but even in a minor way, that's a little bit of a fly in the ointment of the hope that Fed, is going to be cutting rates very soon. And if that happens, I think markets could take a breather.
Okay, Arvind, hi, good morning. I wanted your thoughts on a couple of sectors. One is the PSU banking space, right? There's been a lot of buying action there. In fact, PSUs in general, if we do see a further dip in the market, is it a good opportunity to go ahead and put some more money to work in the PSU space?
Well, typically the PSUs are when everything else has gotten expensive, then people go to the PSUs. So yes, if this is going to keep running, then PSUs are kind of the one of the few areas where you can find value. From us as long-term investors, we're very selective on PSU. Maybe in the power sector, one or two high-quality PSUs, but outside of that, we are somewhat reluctant. And maybe SBI is the exception in the major banks, but we're not big fans of broad-based PSU basket because we like companies where we can trust the promoters to be interested in return on capital and shareholder value. And PSUs ultimately, let's be honest, are about national service, not about shareholder service. And we're not in the favor of giving money to companies whose objectives are not aligned with shareholders. So yes, maybe as a trade, but as a fundamental long-term bet, we prefer private companies where management alignment is very clear.
Got it. Hi, Arvind. Good to see you in. But what's the view on the Indian markets, though, for 2024? Things are looking too good to be true, right? Earnings growth is coming about, stable government, crude is not moving up. What's the risk then?
Unfortunately, as we know in life, when things look too good to be true, there's always some nasty surprises possible. I would say two or three things that could hurt. One would be inflation, not coming down as fast as expected, and all this hot money that is coming in from FIIs, some of that could leave. That's one risk for the Indian market. The other risk is, Indian inflation itself. Is there any risk to that right now? It doesn't seem like it. But, if crude prices start to move higher, if other commodities have a rally, if China shows any signs of life. I mean, this year, one of the best things that happened to India was that China, completely economy was in the doldrums. Nothing stays in the doldrums forever, but if it continues this way, then it's great. But if that comes back to life, that could be cause some commodity markets to reignite. So I think those are the risks. But otherwise, from an overall fundamental standpoint in India, I think the fundamental story, other than the softness in FMCG and rural demand, there isn't any fly in the ointment. And I think, with election spending and all of that, hopefully the rural demand will also pick up. So I really don't see any obvious fly in the ointment, but that doesn't mean that there aren't going to be trading risks. So, I think we just talked earlier about whether we'd be buying PSUs. We'd be buying high-quality companies into any pullbacks, and we can be sure there'll be some unforeseen risk factor that comes to play that causes pullback opportunities, and that could present the chance to buy some of those companies.
All right, Arvind, we'll leave it there. Thank you very much for your time. It's a pleasure having you here on CNBC-TV18. So that's basically the overall picture. By the way, happy holidays, Arvind, if you don't speak with you soon, again before the end of the year.
Yes, happy holidays, happy new year to all your listeners.
To you, to your family, to your team, everyone as well. Thanks very much for being here on the channel.